On this Turning 18 video, I will explain how and why money matters. Now that you turn 18, you have much more financial freedom. However, this independence can also make it easy to get in over your head if you are not careful. This video will explain the pitfalls, rules, and restrictions so that you can enjoy the benefits of financial opportunities turning 18 gives you. The key topics I will be discussing are contracts, bank accounts, loans, and credit reports. The first topic, and arguably one of the most important topics to understand, is contracts. A contract is an enforceable agreement between people or businesses. It is important to know that you can enter into a contract through verbal communications or written. If you enter into a contract, then you can be held liable to obey that contract, either legally or financially. A few examples of the contracts that you might enter into are for a new car, receiving loans for college expenses, leasing an apartment, buying an insurance policy, or accepting the terms of a new job. If you fail to comply to the terms of the contracts, then you could be held liable for breach of contract. So it is important before entering into a contract to know a few tips. First, read the contract. Second, ask questions if you have any concerns. Third, if there's a disagreement, talk to the other party to change that disagreement. Fourth, fill in all the blank spaces. And fifth, make sure the other party signs the finalized contract. The next topic is bank accounts. A bank account is an agreement with your bank where you deposit or withdraw money. In your bank account, you have a savings account or a checkings account. A savings account is meant to save your money, not for everyday use. For example, you use a savings account to buy a car in the future or a house. However, a checkings account is meant for everyday use. You use your checkings account to pay for food, gas, rent, or anything else that you would do on a regular day. It is also important to understand the difference between an ATM and debit cards. ATM stands for automatic teller machine. ATM cards can be used for basic banking transactions such as depositing or withdrawing funds. Debit cards could also be used for depositing or withdrawing funds, but can be used for making purchases. Debit cards immediately takes the money from your bank account. It is very important to make sure you never share your personal identification number, your PIN, with anybody. If somebody gets a hold of your PIN, then they have access to the money in your bank account. So if you lose your debit card or there's unauthorized transactions, make sure to report them to your debit card company. The next topic will explain the basics of a credit card. It is important before signing an agreement to get a credit card to know the terms of repayment, the interest rates, annual fees, late fees, and any other fees and penalties that come along with that credit card. Some credit card companies have grace periods. Grace periods allow you to waive interest on your purchase if you pay your bill in full each month. Remember that making the minimum payments on your credit card, depending on your interest rates, can more than double the actual cost that you originally put on your credit card. Some credit cards allow you for cash advances. A cash advance allows you to withdraw cash from your credit card. However, when you do a cash advance, you will be charged interest rate immediately and sometimes a transactional fee.
Lastly, always remember that if you lose your credit card or if there are any unauthorized transactions, please report them to your credit card company immediately.
The next topic is loans. Loans have timelines for when you must pay them back, minimum amounts you must pay each month, and the interest rates of those loans. There are three types of loans. First, the consumer loan. Consumer loans are taken out by an individual for a large purchase. For example, buying a car or buying a house. The next type of loan is student loans. These loans are designed to help students pay for college. There are two types of student loans. First, there's the subsidized loan, which has no interest rate until after you graduate. Second, there is an unsubsidized loan, which has interest rate while you attend college. The third type of loan is a payday loan. These loans are very small, short-termed, and offered at very high interest rates. These loans are typically used for immediate expenses and are normally paid back within 2 weeks. It is also important to understand some terminology in regards to loans. A principal is the amount of the loan itself, whereas the interest is the amount you pay to your lender in order to have the loan. Collateral is an item of value that is accepted by a lender as protection against any missed payments. For example, if you buy a car and agree to an installment payment, the lender could repossess the car if you fail to make your payments. Lastly, a cosigner. A cosigner is someone, like a parent, who is guaranteeing that they will pay the loan if you do not. You and the cosigner are both legally bound to the agreement. For example, you can get a cosigner for a loan or even an apartment lease. The last topic of this video is credit report. Your credit score is your financial life. Credit scores range from 300 to 850. The higher the number, the more trustworthy banks and lenders find you. It is very important to have good credit because if you have bad credit, it makes it difficult to get a credit card, a loan, an apartment, or even a job. Bad credit can also hurt you for 7 to 10 years. Therefore, it is very important to understand that a credit score is made up of several factors. First, your payment history, then the total amount of debt you owe, then how long you've had a credit history, the types of credit you have, and any new credit. Thank you for watching this Turning 18 video on why money matters.